Every history class tells you Rome fell to the Visigoths. Every textbook says the American Revolution was about freedom. Every documentary frames the French Revolution as a philosophical awakening. They're not wrong, but they're not telling you the whole story either. Because underneath every single one of those collapses, there's a tax bill nobody could pay. The pattern is older than any nation that's ever tried it, and it ends the same way every time. This is Money Origins, where we follow money back to the moments that shaped power, empires, and the world you live in today. By the end of this, you won't see revolutions the same way. You'll see them as something much more mechanical and much more predictable. And there's one detail from 1990 that most people have completely forgotten, which makes everything click into place. Here's what actually happened to Rome, not the version with the barbarians at the gate. By the 3rd and 4th centuries, the Roman state was hemorrhaging money. Wars on every frontier, a bloated bureaucracy, an army that kept demanding higher pay. So the emperors did what every desperate government does. They raised taxes. Then raised them again. The tax on land, called the annona, was recalculated every 15 years in something called the indiction cycle. Each recalculation pushed rates higher. Farmers in Egypt and North Africa were paying somewhere between 1/4 and 1/3 of everything they produced directly to the state. And that's before local levies on top. So they left. Not as a protest, just as survival. Farmers abandoned their land because working it meant owing more than they kept. Roman citizens actually fled toward barbarian-controlled territory because Germanic chiefs taxed less than the emperor did. Let that land for a moment. People chose the barbarians over their own government, not because they admired them, but because they could afford to live there. The Roman state responded by legally binding peasants to the land. You couldn't leave. You were now a serf, attached to the soil you farmed. This is actually where feudalism begins, not in the Middle Ages, but in Rome's desperate attempt to stop its own tax base from disappearing. It didn't work. The tax base collapsed anyway, and without revenue, there was no army. Without an army, there were no borders. The Visigoths didn't conquer Rome. They walked into a vacuum that taxation had already created. The Boston Tea Party in 1773 is one of the most misread events in history. It sounds like a story about tea. It wasn't. The real flashpoint was something called the Townshend Acts, a series of taxes Britain imposed on the American colonies in 1767. Taxes on glass, paint, paper, and yes, tea. The revenue was real, but the legal principle underneath it was the thing colonists couldn't accept. The British Parliament was taxing people who had no seats in Parliament, no vote, no representation, no say. And the colonies weren't asking to pay nothing. Some of them explicitly offered to tax themselves and send the revenue to London. They wanted the right to consent to taxation, not exemption from it. No taxation without representation wasn't a slogan someone invented for a protest sign. It was a legal and moral position rooted in centuries of English common law. The colonists believed they had the same rights as any British subject, and a British subject could not be taxed without parliamentary representation. When 342 chests of East India Company tea went into Boston Harbor that December night, it wasn't vandalism. It was a very deliberate, very calculated act of refusal. And the British response, the coercive acts, the port closures, the crackdown, turned a tax dispute into a war. The revolution didn't begin with muskets. It began with a levy. By 1789, France was technically bankrupt. Louis XVI had inherited a kingdom where the tax structure was almost cartoonishly unfair. French society was divided into 3 estates. The first estate, the clergy, was largely exempt from taxation through a system of voluntary gifts to the crown. The second estate, the nobility, held similar exemptions, inherited privileges that went back centuries. The third estate was everyone else, about 97% of the population, and they carried essentially the entire tax burden. A peasant in the French countryside might owe the taille, a direct income tax, plus the gabelle, which was a salt tax, and you couldn't opt out because the government mandated minimum salt purchases. Then there were road tolls, feudal dues owed to local lords, and tithes to the church. Stacked on top of each other, these obligations could consume the majority of what a family earned in a year. Meanwhile, France had spent ruinously on wars, on Versailles, on financing the American Revolution, ironically enough. The treasury was empty. Louis tried twice to reform the tax system and tax the nobility. The nobility blocked him both times. So in 1789, he called the Estates General for the first time since 1614. What happened next, the Third Estate declaring itself the National Assembly, the storming of the Bastille, the guillotine, is taught as a revolution of ideas: liberty, equality, fraternity. But the spark, the actual detonator, was a tax system so structurally broken that the people who had nothing left were being asked to give more of it. This one people forget, and it's the most instructive example because it happened recently enough that we have video of it. In 1990, Margaret Thatcher introduced the community charge in Britain, instantly nicknamed the poll tax. It was a flat-rate tax, meaning every adult paid the same amount regardless of income. A cleaner and a banker in the same town paid identical bills. The backlash was immediate and violent. In March 1990, central London saw the worst riots since the 1980s. 33 people were injured in Trafalgar Square alone. Over 100,000 people marched. What made the poll tax particularly combustible wasn't just the amount, it was the principle. A flat tax in a society with deep income inequality feels like a direct transfer from the poor to the wealthy. The perception was that the burden had been deliberately shifted downward. Whether or not that was the intent, that was the reality on the ground for millions of people. Thatcher was gone within months. The tax was repealed before it was ever fully implemented. One policy, less than a year, an ending no one predicted. The mechanism is always the same. A government pushes extraction past the point of legitimacy, and the people decide the arrangement is no longer worth keeping. There's a line that runs from Rome to Boston to Paris to London, and it's not drawn in blood, it's drawn in ledgers. Taxes are the oldest negotiation in human history. They're the terms of the deal between the governed and those who govern. And when those terms break, when the weight falls entirely on those who have the least power to refuse it, the deal breaks with them. Not always with a revolution, sometimes with a slow bleed, like Rome, sometimes with a night in a harbor, sometimes with a square in flames. Worth saying here, history is messier than any pattern. These revolutions had political, cultural, and military dimensions that go well beyond tax policy. But if you want to understand why a system actually collapsed, follow the money. Follow who was paying and who wasn't. Money is power, and taxes are where that power gets contested, every generation, without exception. If that framing interests you, the idea that financial systems and political history are the same story, subscribe to Money Origins. That's exactly what this channel is about. And if this one was worth your time, a like helps more people find it. There's more on the channel that picks up where this one leaves off.